A lot to break down here. Obviously, these are two companies, Dollar Tree and Dollar General, that are oftentimes associated with one another, but there's some key differences between them as well.
There's many key differences. I know we've talked on this show before how Dollar General is like the fake dollar store and Dollar Tree is the real dollar store because everything's actually $1. Similar to Five Below, which everything is, of course, below $5. But the true authentic dollar store is Dollar Tree and Family Dollar. So let's not get that twisted because I think I mix these all up in my head. But, I've joked a lot on this show about how this is the best place to buy wine glasses. I'm a frequent shopper at Dollar Tree due to their fantastic wine glasses, but these are names we have to take pretty seriously just due to their scale. So to paint a picture of how big these stores really are, Dollar General has 16,000 locations across the United States. Dollar Tree has 15,000 stores across the United States. And let's compare this to, say, like a Kroger. Kroger has 3,000 stores across the United States. Walmart has 11,000 stores across the United States and Target 1,800. So that means Dollar General is bigger than Kroger, Walmart, and Target combined. So these are huge stores and they have a pretty big effect. Right now we were calling them recession-proof stocks, and they've kind of been just that. Dollar General's up roughly 29% this year. Dollar Tree's up roughly 10% this year. So even though Dollar Tree has seen a much smaller rally, earnings could kind of be their chance to catch up. Dollar General is doing a lot of different things. Whether they're focusing on their grocery segment, they're really working on stepping up their fresh food initiative. So they announced on August 5th, actually, they'll be building new cold storage distribution facilities. And then Dollar Tree did actually see a boost in first quarter, just not as big of a boost as Dollar General. And of course, Family Dollar is still weighing on them. I know we've talked about this, it seems like for now years, but since the acquisition in 2015, Family Dollar still seems to be a headwind for this company. However, when you go to social media, I was actually shocked with the amount of people that are just talking about solely trading these names. I mean, people are thrilled to trade these discount companies and have loved some of the recent price activity. So there was a ton of noise. And I mentioned earlier, we also call sometimes these recession-proof stocks, and that's kind of the buzz right now on social media. So our first tweet is from Alexander, who said, for the combined prices of Dollar General and Dollar Tree, you could buy about 300 items from the dollar store, which is true. I mean, it's kind of funny when you think about their price activity when these are discounters. But again, don't sell these names short. They're big companies, and they're companies people really, really love. So our next tweet says, Dollar Tree is an actual dollar store, and Dollar General is not. Plus, Dollar General year-over-year revenue growth is outpacing Dollar Tree by a lot. Now, again, I mentioned that we call it the fake dollar store. It is still this discount store. So, Kevin, something I'm really curious about when upcoming these earnings tomorrow, margin. Margin is a thing everyone on social media is talking about. What do you think about these names' margin? And could Dollar Tree potentially catch up to Dollar General?
The divergence between Dollar General and Dollar Tree, and you touched on a couple reasons why that's happening and a couple of things that they've done to recognize that. And I think the Family Dollar acquisition in 2015 has kind of weighed on Dollar Tree and hurt their earnings. Not to mention, think about this, guys. Dollar Tree is like a holiday store, event store, things like that. Jenny Horn did not get to do Easter eggs this year or decorate her home for Easter. Graduation season's basically canceled. So all the reasons why they might have outperformed, which their normal things, are gone, or didn't happen this year. But they have a new CEO. That made the stock pop a little bit, and the long-term prospects are still very good for Dollar Tree and Dollar General. And Jenny Horn, you're right. These companies are massive, and they sell very low, reasonably priced products. So they attract consumers looking for deals like wine glasses. They should sponsor anything that Jenny Horn does in terms of wine glasses. Guys,
I did still celebrate Easter this year, Kevin, so I still bought Easter decorations.
There you go. See?
So I could have used Dollar.
There's so much to unpack here, guys, on these particular names. Jenny, I love the point about Dollar General really focusing in on the groceries segment. As we know, that's been a huge catalyst to the upside for some of these other big box retailers like Target and Walmart. But Jenny, we got to leave it there. Jenny Horn, TD Ameritrade Network contributor. Great stuff as always. As we say goodbye to Jenny, we want to welcome in the co-founder of LikeFolio.com, Mr. Landon Swan, to the program. Good morning to you, Landon. And so, Landon, a question for you before we dive into the data here. I might be crazy, but if I recall, Dollar General typically skews to a little bit more of a rural demographic. And so listen here for just a second. So if that's the case, which I believe it is, aren't they a little bit more Amazon proof than some of these other more urban targeted areas, as maybe Amazon can't quite deliver things as quickly to some of those regions of the country as they can to maybe where me and Kevin are here in Chicago?
It's a good question. You're right. Dollar General is skewed more rural. I believe that 3/4 of their stores are in towns, small towns of 20,000 or less. So definitely skewed that way. And they're pretty small stores when you compare them to a Walmart or a Target. But there are a ton of them, as Jenny pointed out. So I'm not sure about the delivery times to those rural areas. You have to get more stats on that. But that is interesting. And I think it's probably a demographic that's going to have a tougher time breaking the habit of just going down to the store and getting something versus jumping online. But as we know, once those habits change, they're often locked in. So I wouldn't say that they're Amazon proof for too long, but that could be a delay in the conversion of their customer base for sure.
All right, I'll jump
Landon,
in.
when we dive into the
Landon,
data here,
I have a
go ahead,
question. I have a question about your data that you're showing today. And you have a chart on Dollar Tree and a chart on Dollar General that, frankly, to the naked eye, if you're not looking at the axes, looks identical. That green line on both looks pretty identical, but except for the numbers, right? They're a little bigger numbers in Dollar General than Dollar Tree. So is the biggest mistake people are making when you look at these two companies together is, other than having the word dollar in both their names, they're really not that identical. Dollar General focuses on other things. Dollar Tree focuses on their things. And Dollar General is just a little bigger. A little bigger. They make a little more money. They do things a little better. Is that really what this comes down to? And the only similarities that they have that we love to connect is the dollar in their name, Landon.
Yeah, I think you're right. I mean, they're obviously different stores. You've got the one that actually has things for $1 at Dollar Tree, and then Dollar General is just deals, basically. But they're both discount retailers. They're both selling things cheap. And it's, less quality products, I think, overall, and you're going to get a much better price for those products. And that definitely appeals to a certain demographic. And that's where their core is. But you're right. When you look at these two charts, they look very, very similar. And it's crazy how much that scale gets messed up by the quarantine. There was a mad rush on both of these kind of stores, including, if you throw in Costco and even Walmart and Target, all kinds of stores where people were going and stocking up because we had no idea how long the quarantine was going to last. And so people were stocking up, and you can see that massive spike. This is a 30-day moving average, so a lot of that came in a very short amount of time. But what's different about these two charts, and you kind of have to really pay attention to everything but the spike, is that you'll see that Dollar General had a sort of flat or almost a slow uptrend, and it's kind of returned now to where it would have been. Whereas if you look at Dollar Tree, it was on a much more aggressive uptrend. It was really starting to tilt upwards. And then it's after this quarantine effect, it started to lose that steam. And so that's a little bit more concerning. I mean, look at the uptrend here from the beginning of 2017 until right before quarantine. Huge spike on quarantine, and then the uptrend was completely gone. So that's concerning. We've been bullish on Dollar Tree for quite a while because of this chart pre-quarantine, but now post-quarantine, it's a little bit more concerning. I don't like that uptrend has gone away completely, and now their levels, they're down year over year, far more than about twice as much as Dollar General is down year over year. So concerning for both, just because it's tough when you look at how they're doing versus quarantine. But for when you compare the two of them, I would say that Dollar Tree is a little bit more concerning because it's actually snapped that uptrend that they had prior quarantine.
So if we go off of this, Landon, we kind of split them into the two different companies that they are, starting in addressing Dollar General first. Is it a little bit different when we look at your data point and maybe actually kind of something we could project onto maybe some of these other bigger box retailers down the road, because Dollar General skews a little bit more rural, and those areas of the country are maybe more along the reopening process than, let's say, more urban areas like a New York, that we've kind of seen kind of a return back to normal after the initial shock. And that's kind of what you'd expect in parts of those of that country. And then when you look at something like Dollar Tree, to Kevin's point earlier, is it possible that we're seeing that drop off as a result of, maybe some of these events being canceled, maybe things being postponed, and that being a major draw as some of the more novelty items, things that you just get for a one-time use, less frequent need for that right now with less things going on?
Right. I think those are both great points. You've got, just like you said, you've got the areas of town or the areas of the country that are more likely to be opening up, and you've got grocery shopping, which everyone needs in Dollar General, and then Dollar Tree, you got cheap stuff that's kind of, nice to have, but you don't really, make a trip to go get that stuff. It's not super important. And if they're in areas that are more likely to be closed down or have issues right now, then yeah, the sales are going to hurt. So definitely a good point. I don't like that the data is showing that there's a very strong snap there between Dollar Tree and its previous uptrend, but that could be the justification for it. So that's a great point. On a side note, the happiness for the two is pretty far off as well. Dollar General, about 61% happy. Dollar Tree better at 67%. So long term, that's generally speaking at LikeFolio, happiness is a little bit of a longer term indicator. And so Dollar Tree is sitting a little bit better off than Dollar General. But I think once everything opens back up, we'll need to see where these trend lines go. But for now, you're right. That could be the justification for both of these moves. And the stock prices are interesting. I think the market kind of knows that. If you look at Dollar General, where it was before all of this, it's basically went from 150 to now 200. Dollar Tree basically went from 90 to maybe 105 now. So it's a much bigger change upward for Dollar General than Dollar Tree. So, the value is being played out in the market. I think investors kind of are on top of this trend. So it's very interesting, but great points, Alex.
Landon, we got to wrap things up here. Kevin and I are going to dive into a trade, but I want to get your final thoughts here. And everything I'm hearing from you in this conversation, it almost is like a head scratcher, because you'd think that because they're discounting their dollar, that they would be so, recession proof, as Jenny put, and kind of, benefiting from a slowdown. But everything we've said is because this is such a unique situation, they're actually potentially poised to benefit from a more, robust and reopened economy.
Right. I agree. And it's tough. I mean, it's how many people are going to be going back to work? What's the economy going to be doing? When is everything going to be opening back up, rural versus urban? It's so hard to answer all these questions. Right now, all we have is the data, and that's what we like to look at. We see that Dollar Tree has not returned to normal yet, and Dollar General basically has. And so, at the current prices, it's tough. Obviously, I like to buy low versus buy high, but I'm more of a data guy. So if I had to pick one of these to be bearish, it's definitely Dollar Tree. And if I had to pick one to be bullish, it's Dollar General, even though, both of them are far off of their quarantine highs. So I'd rather zoom out and get maybe another 3 to 6 months worth of data, come back to you at the end of the year. But right now, that's what it's looking like from LikeFolio data.